Welcome to this month's market update. I'm joined today by Chris Trevillyan, Director of Investment Strategy at Frontier. Hi there, Chris.
Hi, Wayne.
Plenty of financial news coming out of the US in the last month. Could you maybe just step us through some of the key points that you've been looking at?
Yeah, the big news in financial markets during the month was the Federal Reserve having their meeting this month. Now, they didn't actually announce any changes at that meeting. Interest rates still remain where they are at around zero. But what they did announce in their statement of policy from that meeting was that they are likely to start tapering their quantitative easing program later in the year. So they're signalling that they're going to slow the pace of bond purchases they will do later in the year, and that they're likely to stop purchase and to finish that process in the middle of next year. So no actual changes, just signalling what they're going to do. But given how significant monetary policy stimulus has been post the initial COVID impacts, that was seen as quite big news. The other big news that's getting into headlines in the US has been concerns around the federal government debt ceiling levels there. Ultimately, that could lead to government shutdowns, to treasury bond defaults. Now, historically, when these issues have come up, a resolution is found, and that would still be expected to occur. But just given the potential scale of the impacts of that, that has weighed on markets over the month.
Sure. And what about other central banks around the world? How are they reacting?
Well, in general, it's sort of been a similar theme there. So the Bank of England, they'd already started tapering their quantitative easing program, and they announced this month that they are likely to start increasing interest rates soon. So from what we've experienced over the last 12 months, that actually is a pretty big change that will be starting to occur. The European Central Bank, they also announced that they're slowing the pace of bond purchasing there, although they were clear to say that they would not be stopping that anytime soon and did not expect to be raising rates anytime soon. Conversely, the one where it was slightly different was actually here in Australia. The RBA announced that it would actually be extending its bond purchasing program, which originally was due to finish in November this year, but they've extended that into February next year. And that's in response to the COVID outbreaks we've seen here in Australia and the lockdowns and the slowing of economic growth here, which is different to what has been experienced overseas.
And so how have markets responded to some of those signals, Chris?
Well, to put it bluntly, it was quite a negative month across the board in September, Wayne. So as you can see here in the chart, in response to the Federal Reserve's announcements of their plans, we have seen bond yields pick up markedly in September, and they're now approaching back to sort of levels that they were at the start of the year. So with bond yields rising, that's meant negative returns from fixed interest in the month. And we also saw in equity markets broadly negative returns in the month. So that was both responding to these announcements from the Fed and also concerns about debt ceiling and the risks that would be there. The one exception, or one of the exceptions to that, was actually Japanese equities, which did produce a small positive return in the month. In the month, the Japanese Prime Minister announced his resignation before elections in November. And so there's hope there of increased fiscal stimulus, and the Japanese economy, which had been lagging, is now seeing higher vaccination rates, and the hope that as COVID restrictions start to ease, as case spreads starts to slow there, they will actually get a positive outcome. But unfortunately, overall, quite a negative month in September, Wayne.
But if we drill down into commodity markets, pardon the pun, there've been some big moves there recently, hasn't there?
Oh, commodity markets have been just very, very volatile over recent months. We've seen iron ore price actually fall quite sharply and continue to fall sharply through the month. This has been linked to a slowdown in China. Construction activity in China has been declining, particularly in the housing market, where authorities are trying to cool off some overheating within that market. And so that's actually led to the Australian dollar weakening a bit against the US dollar over the month. Conversely, though, we've seen the oil price rise sharply, and in particular, the coal price has just risen extremely strongly over recent months. And you can see that in the chart here that we're showing. There's just a general overall energy issues globally. We've seen as economies are opening up, demand is picking up sharply, but then some supply chain constraints, some limitations in supply have put a crunch in their energy markets. And so that's seen some really big moves in prices of commodities, particularly energy stocks. And that's likely to be something that's going to continue to unfold over the next few months.
So plenty happening. Good to know you're across all of that, Chris. Thanks for sharing some of those insights with us today. And thanks for watching this month's Market Update.